we had some requests for a macro video, kind of zoomed out, exactly trying to figure out when we should be taking profit. If we're going to keep going till the end of the year, let's go over it. First of all, we've got SPY. What are we doing? We had some crazy gap ups last week. So far, one of them got filled. You know, these like to get filled. We still have this big old sucker below, though. That's a scary thing. If we stay above last week's low at like the 679, we're going to just keep melting up. We are in a narrowing wedge here. Keep that in mind. It's going to be bouncing off of that. You can put in the 2x4s if you want to help calculate that. If we do get down and fill this gap, I don't know. I don't like it. I think we might get like a week or two or three of just more bleed. Could even go down to end of October is where I'm thinking. Possibility obviously is the easy one that everyone sees is there's two gaps. Okay, we fill them and just go up like this, but I don't know. I think the path of least resistance here is probably just going to be up. You know, I hope we just keep going up from here. Where are we macro zoomed out? Periods when to make money. This is the farmer cycle peak from the 1924 2026 for real estate and stocks. Another view of it is the 18-year real estate cycle 2026. So we're finally in the time where we're going to start getting some banging deals, I think, this winter across all markets. There's a big news coming out that's they're calling it the Hindenburg Omen. It's great. It's a great name. They're saying that this triggered, and most of the time this triggers within like 2 months. 83% of the time, stonks go down. I think this is kind of in line. Again, I think we're going to melt up. I think for at least till December. End of December, we got a lot of confluence going on. But what is this Hindenburg Omen? It's basically it takes about 5 or 10 different things like EMAs and overbought PEs and stuff like that. And once those hit a certain number, then it will trigger saying that, hey, just be careful. Don't sell everything right now, but just be careful that coming pretty soon, stuff's getting ridiculous. According to bull theory, the U.S. economy is in deep trouble now. Do we want to go through all this stuff? I don't. Basically, what a lot of people are getting at is the Fed started switching the rates, right? I don't think the rates really actually matter too much. What really matters is QT. Do you remember that? About QE, quantitative easing? Let's just get to it. What are the big boys buying last month? This is what they bought. This is not even like the stuff you'd think it would. They're actually putting more money into United Health, the UPS, NextEra Energy, Pepsi, RLI. Have you even heard of these tickers? Obviously, you've probably heard of Pepsi, but even though Nvidia and Tesla and all that are going to new all-time highs, watch where the big money's actually going. They're actually putting more money into the stuff you can touch, like we were talking about, like America Energy, bulletproof companies. This guy's probably the best when it comes to PEs and like market cycles and like, are we overbought? His name is Maverick Equity Research. He's got a Substack and it's super awesome. You're not going to find anyone better that does it. What is this showing? This is showing that stuff ain't looking too hot. He's not buying anything right now. Now, could stuff still keep going up for a handful of months? Yes. But he's not really buying much right now. I understand that with the tech stuff, but a lot of the consumer staple stuff, like the stuff we saw before, a lot of the health things are like 80% off. That's the stuff we're looking at. Just like the potash videos, the last video we came out with, take a look at that. Again, he's showing here, are we overvalued? This is the free cash flow model. It's got quite a bit. Pause it, look at this if you want. The other thing to think about though is even though the PE ratio is about where it was in like the 2000.com bubble, we got to realize that our profit margins are way higher. Why? Because it's just cheaper to make stuff as far as computers go. So our profit margins are almost double what they were in the 2000 dot-com bubble. Something not many people are talking about. NASDAQ now versus then. In the dot-com bubble, you've got the light blue, and now we'll call it the AI bubble, let's call it 2023, we're only here. So technically, SPX could head up to 7,500. You know, that's another 15% up, something like that, 20% up. That's huge. So according to PE ratios, we're kind of overbought, but that's really only taking like the meat. You know, that's only those big like Mag 7s. You know, a lot of the mid caps and small caps are still cheap. That's why this is also showing we have room to go. Again, global IT sector in the late 1990s index and the index from 2021. These are two great charts. You can pause it and take a look at them. What is this showing? We're still about 10% away. So with 97 price returns versus 87% earnings, there is currently a 10% gap, which is very hard to say that we are in a bubble. Are we in blow off top? No. Yes, some stuff is overvalued, but who doesn't want to own the overvalued stuff? I still want some. Let's get back to what matters. How about this bar chart? They're saying breaking the U.S. banks. The Federal Reserve just pumped $29 billion, which is nothing in today's standards, if you ask me, into the U.S. banking system through overnight repos. This amount far surpasses even the peak of the dot-com bubble. Probably fine, carry on. It's not. He brings up the dot-com bubble, but he's not talking about anything like close to that. He even makes fun of it and says, I love how some people keep saying it was worse in COVID. And he says, you're a doomer, bar chart. If you're one data point where it was worse than the global pandemic, then the world would ready for your gotcha moment. You've lost the plot, he's saying. I don't know. And the reason I'm saying I don't know is because you can chart the CBIT crash. And it was like, what, 3 to 6 months? Yeah. It was 2 quarters left after they started QE. QE is really all that matters in these markets that are Federal Reserve controlled. The non-BRICS, right? So they started QE 2 quarters before March 2020 hit. That's historically when markets crash. So say we didn't even nothing macro even happened on March 2020. We already knew it was coming because we had 2 quarters of QE. In fact, it was crazy QE. And of course, I was going to have it up, but essentially, we are nowhere near what we were printing in like 2020 or before that 2019. Because remember, we had 2 quarters before March. So then it was 20x more QE. This is literally just the start of QE. It's nothing. It's a little blip. So when should we take profit? I said crazy. It's that you heard of the 3i AT Atlas thing? It's like a little galaxy or like a big old meteor or something. It's a spacecraft. It's some big old object that nobody can tell what it is. That thing is going to be the closest to Earth, 269 million kilometers close, on December 19th. And so you're going to have a lot of people that are going to, be calling probably like into the world, or maybe the aliens are coming or all that on December 19th, because this crazy flying thing in the galaxy is going to be close to us. Well, what else happens there? MOPEX, monthly options expiration for all the stock market and crypto and all that. It's 3rd Friday of December. But basically like a week before Christmas, we've got this thing coming. Wait for the headlines on that, but remember what matters is the expiration. So I'm gonna try to be out, maybe second week of December, maybe the 15th-ish, somewhere around there, and get ready for at least some crazy volatility to maybe get some better ends on some things. And that is all we have for today's video. Any more questions or something I totally missed, let me know down in the comments. Thanks for watching.